Chapter 15, Lesson 12. Get all the financing you need before you quit. Benjamin Franklin once said, "If you'd like to know the value of money, try to borrow some." $100,000 was practically burning a hole in my pocket, and I couldn't spend it fast enough. The more I looked for something to spend all that cash on, the more it seemed like I would never be able to do it. As impatience started to creep in all over me, I saw my plans slipping away. My time was running out. If I didn't spend this money in the next few weeks, it would all be over. In just 3 more weeks, I would blow right past my timeline and I would be stuck with the money. This was another problem for me. Yes, this is a good problem to have, but not one that I wanted. For 5 months, I'd been looking for another property to invest in. With my rental property business, I had a special process for recycling money over and over again, building my rental portfolio bigger and bigger. Having money to buy more income-producing properties is crucial. 10 years ago, I did this same process for the very first time. This simple process has a simple name to it, the BRRRR strategy. This strategy is where you buy, rehab, rent, refinance, repeat. As simple as it sounds, it's a long and involved process, but has really advanced my rental property business over the years. Basically, I buy rental property for cash. Then I rehab or fix up the property to make it rent ready. Once it's fixed up, I have my property manager find and place a good tenant into it. When the property is producing a monthly cash flow, I refinance it with a bank and pull out all the money I invested into it. This process basically allows me to own a property with almost no money of my own put into the property. Since I pull out all my money, I'm free to do with it whatever I want. With the refinance of the property, I proceed to purchase another rental property with the ability to repeat the process all over again. Each time I repeat this process, my business grows, I make more money, and I own more real estate, increasing my net worth. Like I said, this process is much more complicated than it sounds. If you want to know more about it, you can see it on my website at www.masterpassiveincome.com/BRRRR. If I didn't spend the $100,000 in the next few weeks, my window to accomplish this BRRR plan one more time before I quit my job would be closed. My plan was to quit December of 2016, and I hadn't even started the first part of the process, let alone the refinance portion. My ability to refinance these properties and get my money out of them was going away quickly. Banks don't like it when someone quits their job in the middle of a refinancing process. For some reason, they don't think the loan will get paid back. A little bit of sarcasm here. Over the course of the 2 months, I purchased 4 properties for a total of $100,000 in cash. The beautiful thing is that these 4 properties bring in a total of $3,000 in cash flow into my pocket each month. Once I had these properties in my possession, I wasted no time and started the refinance process immediately. Even though 2 were not rented yet, I still wanted the long refinance process to be finished quickly. "Okay, Mr. Heiner, your loan has been funded. Your bank should receive the wire transfer in a couple hours," my loan broker informed me over the phone. "Terrific. I really appreciate the help with this entire process. The 3 months of waiting for this finally paid off," I said. The reality was, even though I could barely stand my job anymore, I couldn't quit until the process was finished. After a long couple of months in the loan process, the wire transfer for $78,791.44 was deposited into my account on January 3rd, 2017. With this new money in my account, I was able to purchase more properties which would make me even more money. Finance or refinance everything. As I stated many times, banks don't like it when you quit your job in the middle of getting a loan. Their entire business plan is to lend people money who will pay them back with interest. They make sure each person they give a loan to is more than likely going to fulfill their obligation to pay off the debt. If you're in my line of work and need to refinance properties, do it before you quit. Once you do, you no longer have that income and may not be able to show the bank you have enough income to pay the debt. Banks require that your debt-to-income ratio be at a certain level for the lender to feel comfortable lending their money to you. What about if you want to purchase a new vehicle or buy yourself a jet ski? In order to finance a big purchase like this, it's much easier to get the loan if you can show the bank you have income from your job as a source to repay the loan. Now that you see the value of a job to get a loan, think about the loans you already have. I suggest you look at all your loans to see if you should refinance any of them. You could get a lower rate, shorter term length, or find a way to pull money out and use it to make more money. Go through all your loans and make sure they are the best rates and terms for you and your family. If the rates can be lowered enough to make it a good investment, be sure to finish the refinance before you quit your job. In the end, make sure you do not need to have any more banks verify your income and ability to repay the loan after you quit. Section 4. H is for hacking your future. Zig Ziglar once said, "You were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win." My wife and I have 4 terrific children. They are truly a blessing. When my wife told me she was pregnant with our first child, my mind went 100 miles per hour thinking of all the problems, issues, and worries that come with having a child. Many feelings came over me almost all at once. I felt I wasn't prepared, didn't know what I was going to do, or even that it would screw everything up for my family. Even though I had all these emotions crashing over me, month after month, my worries slowly went away. It was as if the Lord God made childbearing take 9 months just to help parents adjust to life with a child. Going from having a job to being an entrepreneur is not much different than this. For the longest time, all you know is life with a job. Year after year, you become comfortable and complacent. Then you start a business and build it year after year. When your business is finally ready to be your only source of income, the countdown begins. Just like the 9 months of pregnancy, you have to give yourself a time limit to quit your job. My business was built up enough for me to quit my job 12 months before I actually did it. I knew I was ready to quit my job, but I didn't have the conviction to do it. So I gave myself a deadline. I told myself I had 12 months to prepare for life without a job. Just 12 more months receiving a steady paycheck, and then I will make myself quit. From that time on, the deadline forced me to focus my efforts on only the most important things that would help me be successful in the months and years without a job. In those 12 months, if I had a concern or worry about the future, I counted it as a problem to solve, not something that would hold me back. Being proactive and planning for your future without a job is the best way to set yourself up for success. What if you could give yourself a head start now and plan your future to be an absolute success when you quit your job? Wouldn't you take it? I sure would and did. In this section, we will look at how to be as prepared as possible for life without a job and a steady paycheck. The year leading up to when I quit my job, I was very worried about not being able to rely on that consistent income from my paycheck. I began to question myself, thinking my business wasn't good enough or that it would fail and my family would end up on the streets. Thinking through all the potential issues and problems that may arise, I was able to set myself up for success. For Section 4, H is for hacking your future. Savings, expenses, income, financing are all items in your future that have to be rethought. Life with a steady paycheck is almost over, and now it is crucial to plan how to quit successfully. Issues may arise, like what happens if your business isn't doing well, or you may need to get financing to fund your business. These possibilities and more need to be taken into account before you quit your job. Your future is what you make of it. Time to start hacking it so you can be successful without that job that's holding you back from life. Chapter 16, Lesson 13, Living on Your Business Income Without Your Job. Norman Vincent Peale once said, "People become really quite remarkable when they start thinking that they can do things. When they believe in themselves, they have the first secret of success." I was terrified the first time I did it. Even though we had a plan, we didn't have a plan B. Plan A seemed possible, but highly unlikely that we would actually pull it off and be successful. The baby was coming in 9 months, ready or not. Our first child was a beautiful baby girl who made life so fun. With all that fun came a dramatic loss of income. Not just the loss of income from my wife no longer working, but all the new expenses that come with a baby. Diapers, food, clothing, and more were expenses we now had to account for. While Melissa and I were engaged, we both decided she would stay at home and raise our children while I worked. It wasn't just being home as they grew older while they went through public school. She had a strong desire to homeschool them as well. We believed, and still do, that it would be best for her to be the one to teach our children. Now, much further along in life with 4 children, we're very glad and know that we made the right decision for our family. For many years, she had her own job and made decent money. When we opened our retail location, she quit her job to manage the store. Day in and day out, she worked hard managing the employees, inventory, handling sales, and everything a manager needed to do to run a business. This went on for a year or so, then she got pregnant. Knowing that she wasn't going to continue working and earning a paycheck, we needed a plan for the future with only one income. Many questions came into our minds. Would we have enough money to pay our mortgage? Will our insurance cover everything? Do we have enough savings? Should we give up a stable job for something we believe is better? Even though all these questions and thoughts were running through our minds, we knew it was the right decision. No matter what, we would make it work. Looking back now, years later, we've never regretted a minute of her not working. There were some sacrifices in our lives that we had to make along the way, but it was all worth it. No one ever said on their deathbed, "I wish I would have worked more hours at my job." My wife and I wholeheartedly agree with that sentiment. Living on your business income is a leap of faith. There are some financial preparations you need to think through and plan for before you stop working. Though it can be done, it wouldn't be very wise to just up and quit without having things like savings, a budget, and a plan for a life without a steady paycheck. Most people don't want to take the risk of living one income, let alone living solely on their business income. This lesson will help you think through this process before you quit. Analyze your expenses. A few years ago, there was a financial guru that was teaching people his way of being rich. A term he coined was called the latte factor. As this guru went through his lesson, he pointed out one person who had a latte from a local coffee shop. From there, he went on a 10-minute explanation of how much that person was spending each week, month, and year on their lattes, hence the name Latte Factor. As he went through the numbers, $5 a day times 5 days a week multiplied by 52 weeks a year adds up to $1,300 a year spent on fancy coffee. Now, I will say that I completely agree with the premise he's making. Little expenses add up to big expenses in the end. That being said, his teaching was basically how to work a job until retirement, stop spending, save your money, and have a large bank account when you retire. These ideas are not bad in and of themselves, but I believe they miss the mark when it comes to actually building wealth. Here are a few huge problems I see with that type of thinking. Number 1, you don't know if your money will last the rest of your life. Number 2, you don't know if you will live to retirement age. Number 3, your prime years in life are spent working for someone else. Number 4, your money isn't working for you, but just sitting there in a bank earning 0.0015% interest. And number 5, you're passing up the finer things in life in the hopes that you will enjoy them when you're 68 or older. Personally, I don't want to wait until I'm 68 years old to enjoy my money, let alone my life. At the time of this writing, I've already quit my job and am only 37 years old. If I waited until I was 68 years old, that would be another 31 years before I could actually live my life. If you want to have a latte every day, you should work to build a business that will pay for your lattes. If you want to be able to ski for 1 month a year in Whistler, British Columbia, then you should focus on making enough money from your business to pay for it. Missing out on things you desire is not the goal. Earning enough money to pay for those things is the goal. Even though we're all about making money to pay for the things we want, it's also wise to make sure you're not spending any more than you absolutely have to. This leads me to another business lesson I learned from owning my business, Downtown Express. Your expenses can always be reduced. No matter if you believe you're paying the lowest amount possible, there can still be a way to reduce your expenses even further. When I set up the business, I found the best and least expensive credit card processor out there at the time. 4 years later, the new owner of the business found a new credit card processor who charged them half as much as I was being charged. As times change, so do prices. Always be looking for ways to cut your expenses, even if you believe you've already found the best and least expensive service possible. Cut and/or reduce your expenses. Now that you have one income and a budget, it's time for you to find all expenses that you can cut or reduce. I'll say that life is not about going without the good things in life. You should be able to do what you want when you want to do it. Having a $5 latte each day isn't bad in and of itself, but can be bad if you do not have the money to buy it. Enjoying the finer things in life is what being an entrepreneur allows you to do. If you have the money and put it in your budget, spend away. Just make sure you do not spend money you do not have. This exercise is about cutting expenses, not cutting out things you want. Look at every way you can reduce how much you spend on the things you already receive. Do you need that NFL package with your cable television subscription? How about that cable package itself while we're at it? Do you need that? I'm not saying that you don't need these things. I'm merely asking the question for you to consider for yourself if you really need or want them. Consider all of your expenses to make sure these are the things you want to spend your money on. I suggest calling every company you get services from and ask to have your rates reduced or even cut. Here's a quick list to get you started. Credit card interest rates, cell phone plans, cable TV or satellite service, gym memberships, pest control, yard service, home internet service, home insurance rates, automobile insurance, and home security monitoring systems. For example, I once cut my satellite TV bill from $80 a month to $11 just by asking. My family and I never really watch TV very much, so I decided to call and cancel my subscription. While talking with the service provider about canceling, they asked why I wanted to cancel. After informing them that we just did not watch it and didn't want to spend the money on it, the service person asked me what it would take to keep our business. Wow, great question, I thought. After thinking about it for a second, I told her I didn't want to pay $80 anymore and to just cancel the service. She then asked, "How much would you be willing to pay to keep the service?" I said, $10. Even though I did want to cancel, $10 a month would be just low enough that I would continue with the service. A few minutes later, she worked her magic, and now my bill for the service is $11 a month. For the better part of 2 years, my TV service has been $11.14 a month with HD, DVR, 90 channels, and more. Winning! Here are other ways you can cut costs and save money. Buy food in bulk from places like Costco. Dried and frozen food is inexpensive and lasts a long time. Sell the expensive car you have and buy an old beater car for a fraction of the price. Use GasBuddy.com to find cheaper gas. Maybe find a smaller home to live in and rent out your large home to someone who wants to spend all that money. Cut luxuries you don't need, haircuts, manicures, etc. Eat at home more often. You pay at least twice as much to eat out than you would if you ate at home. Remember, this exercise is to reduce your expenses so your money will go further each month without your paycheck. There's no need to pay a penny more for the goods and services than you have to. Afford everything. A quick sidebar about income and expenses. As I said before, having a business is all about making money, not earning it. The difference between earning and making is, as a business owner, you make money from places where it doesn't already exist. Before you created your business, that specific stream of income wasn't there for you. The money was already in the pockets of your customers. You just didn't have a way to transfer it to you. When you're an employee, your boss already has the money and agrees to give it to you when you give him your time. With a job, you earn money. With a business, you make money. The goal of your businesses is to be able to live however you want to live, not how someone else tells you to live. If you want to buy a Ferrari, build your business big enough to afford it. If you want to travel the world, you design your business so that you can be anywhere in the world and still conduct your business remotely. With your business, you'll have the time and money to afford the trip. In your business, the only thing holding you back is yourself. As you continue to build your business and increase your income, you have the ability to make enough money to afford anything you want. The more effort, planning, and execution you put into your business properly, the more your business will grow. Again, the only limitation is you and what you're capable of achieving. Do you think Warren Buffett, Bill Gates, or Donald Trump have a spending budget for themselves? I'm not sure if they do or not, but a safe guess is that they make so much money that they don't need a budget anymore. They probably make enough in 1 month to cover their year of expenses. Your goal is to build your business enough so that you no longer need a budget because you have so much money coming in. As in everything, practice makes perfect. The best way to know if you can live on your business income is to just do it. I suggest that you start living on your business income 1 year before you actually quit your job. Since you still have your job, you have the ability to give it a trial run to see what it's like. Doing this will allow you to know what your income and expenses will be like once you quit. A great way to do this is to create a new bank account that's completely separate from the accounts you already have. Once that's open, have your entire paycheck taken out of your account every month and deposited into this new account. Set it aside and don't touch it, even if life gets rough. Dip into your savings if you have to, but leave your job income alone in this new bank account. Do this for a minimum of 6 months to really see the ups and downs that one income will bring. A huge side bonus of doing this is that after 6 months, you will have your entire income saved for when you no longer have a job. If you make $60,000 a year from your job, you could have saved close to $30,000 in your trial run by saving all that income. If you did this for the entire year, you will have $60,000 saved as an emergency fund for the ups and downs of your business and life. Living on your business income is absolutely possible. Trust me. Take action. Number 1. How much money do you need monthly to live on if you quit your job? Use the quick budget calculator to find out the numbers. You can download the budget calculator at www.masterpassiveincome.com/quickbudget. You need to know your total potential business income for the year, your total expenses, the total difference between the two. If the difference is negative, then you will lose money each month. Number 2, how much money can you save each month from your job to practice living on your business income? Write down the total number of months until you quit. Now multiply these two to get the total amount that you can save. And number 3, what expenses can you cut out completely or reduce now in preparation for living on one income? Write your answers down and start today with reducing these expenses. Chapter 17, Lesson 14. Pessimism is good when it comes to future income. Sam Walton once said, "Capital isn't scarce, vision is." I was forced to do it. What else could I do? My business partners were fed up. Minimum wage had gone up 15% 2 times in 2 years. Sales had been declining since the real estate market crash of 2009, and money was running out. All eyes were focused on me as we met together for our monthly business meeting. The question in their eyes were all the same. What are we going to do? 4 years before, we had high hopes and dreams that this little business would grow to be a large business with multiple locations. The business was called Downtown Express, and we built it from the ground up. Literally, the location of the business was a building that didn't have a concrete slab, plumbing, electrical, or anything else. The concept, design, and functionality were all created by my partners and I. We worked for months building, designing, and developing the business to be as successful as possible. We all believed that this business would allow us to quit our jobs while continuing to build the business year after year. Sales are just not what they were before the real estate market crash. People all around us lost their jobs, and our customers don't have the money they did in the past, Sky, my business partner, said. I know, I replied sadly. We need to sell the business while we can. The sales are still good enough for an owner-operator to buy it and make a good living. Why don't we try to sell the business? Denise, another partner, added. It's not like selling a car on Craigslist.com or even a house. There's much more that goes into it. Also, the amount of people looking for our type of business is very small, maybe 1 in 1,000 people or worse. There aren't many people looking to buy a business, let alone a retail store like ours, as well as desire this specific location, I interjected. Well, we need to do something. Soon, we'll be putting our own money into the business just to keep it open. We don't want to do that. We'd rather close up business than do that, Sky stated. Being the perpetual optimist, I said to them, all right, I'll find a buyer. I'll get us out of this. This was supposed to be our ticket out of our jobs. It was a good deal, but it had become an ordeal, and now my partners wanted a new deal. This business was my idea from the beginning, and I was the CEO of the company. I took it upon myself to find a buyer for the business, as futile as it would be. 3 months later, after trying everything to find a buyer and failing, I couldn't help but beat my head with this one question. Why did I tell them I could sell the business? Now that I had promised the business would be sold, It was up to me to figure out how to do it. As an entrepreneur, this was a problem that I had to solve. It wasn't just me on the line, it was my business partners as well. 2 months later, on December 31st, 2010, I successfully sold the business. After all was said and done, we did lose money on the sale of the business from what we put into it. That hurt. The bright side was that we were no longer responsible for the lease, which had another 2 years left. We were completely out of a business that was costing us money every day. A lesson learned. Looking back now, it's easy to see how we could have been better at figuring out our income and expenses. One lesson I took away from this business experience was, whatever your profit projections are, cut them in half. If you can survive with that, then you have a good chance. For me, this applies to all types of businesses, especially the businesses that you depend on to pay your bills when you quit your job. I was created as an eternal optimist. It takes a lot for me to be pessimistic in anything. Actually, there's a song that really explains me, possibly to a fault. The 1946 Broadway musical, Annie Get Your Gun, has Annie and Frank battle back and forth in a song, who can do things better than the other. The song is affectionately called Anything You Can Do. During the song, Frank and Annie playfully argue about who can be better than the other in many different things. Sing softly, sing higher, sing sweeter, hold a note longer, etc. The main line that resonates with me is, anything you can do, I can do better. Maybe it's the entrepreneur in me, but that is usually how I view the world and everything in it. Where someone else failed, I'll succeed. Where someone else succeeded, I can do it better than them. Yes, I know it's not totally true, but because I'm an entrepreneur, I'm driven to succeed, no matter what. Now, in the area of income, I focus on being pessimistic. Selling my business was a hard lesson to learn, but I did. When it came time to quit my job, I knew that I needed to account for the possibility that my income from my businesses would not come in as projected. My expenses don't really change much, unless I do something out of the ordinary. The bills come in each month whether I have money to pay them or not. This is why it's best to plan your income, but be pessimistic on the total amount you can bring in. For example, if my rental property business usually makes $10,000 a month or more, then I need to be pessimistic and cut that in half. If I can survive on $5,000 a month and still pay all my bills and expenses, then I figure I'll be just fine. Remember my story where I had 3 months of no income from my businesses, but still had expenses and was buying things I didn't need? Yeah, that was pretty bad. Times will come where you have ups and downs in your business. Make sure that when those low income months come, you've already accounted for the lack in income because you are pessimistic about your income. Take action. Number 1. What do you expect your monthly income to be in each of the next 6 months? Write this in your journal. Number 2. What were the previous 6 months' income? Write that as well. Number 3. Are your future projections for your business realistic compared to how your previous 6 months really were? And number 4. How will you proceed given any issues between your past and future expected income? Brainstorm your solutions in your journal. Chapter 18, Lesson 15. What an accountant says about quitting your job. Mark Twain once said, 20 years from now, you'll be more disappointed by the things that you didn't do than by the ones you did do. I failed the first time I tried it. It didn't help that I didn't really put all my effort into it. Maybe it was a lack of passion, drive, or even desire, but ability wasn't the problem. I had succeeded in tougher things in the past. I had accomplished many difficult things in my lifetime, walking on and making the Fresno State football team, starting a successful graphic and website design company, and a few others. These were great accomplishments for me. The reason why was because I had passion and a desire to be successful in those. In this, though, I had failed. I received a D for my Accounting 4A class in college. A D grade was not a passing grade, and I wouldn't graduate without passing this class. Trying again a second time, I didn't fare much better, but did eventually pass the class. Accounting 4A and 4B were the required accounting classes I needed to graduate with a bachelor's in business. Like most people, other than bean counters, I hated the class. Even though I passed these classes, the real thing I learned from taking them was that I should pay someone else to do what I hated doing. Now, I know what you're thinking, and I didn't pay someone to take my tests and do my homework. I did, however, partner up with someone who loved the class and planned on being an accountant after college. She loved accounting, and I hated it. There's nothing that puts me to sleep faster than a general ledger with its debits and credits boring me to death. Looking at a general ledger, I'd be out cold in 30 seconds flat and dead asleep. As a business owner, I look at the profit and loss of a company or organization. That's where entrepreneurs know if their business is making money or not. This experience in my college accounting courses taught me the value of paying others, like accountants, to do what I do not want to do. They love doing the work, have a passion for numbers, and are great at what they do. What takes them 7 hours to do would take me 7 weeks to do, and I would hate every minute of it. Along with paying my accountant, there's another person I love to pay money to in this world. The managers of my rental properties. These wonderful people do all the things I could do, but would rather pay them to do it. I don't want to use my time cleaning up properties, finding tenants, collecting rents, and going through the hassle of evictions. Just like my accountant, my life is easier when I pay them to do the work I don't want to do. Both my property managers and accountants I work with make life so much easier. My business grows as I focus on my strengths to build the business. Having enough money to pay these wonderful people is a problem that I'm glad to find a solution for. I can afford good accountants because I spend my time where it's best used. Time for a sit-down conversation. 6 months before I quit my job, I sat down with my accountant to see if there was anything I should prepare for before I quit. He's been in the business for many years and has even worked for the IRS, so he knows how they work. Even better, he worked as an auditor for the IRS, so he has a good knowledge of how to stay away from being audited. I spent over an hour with him running through my plan of quitting my job with passive income to get his wisdom and expertise. The very first thing that he said to me was, "Yes, you should absolutely quit your job." This somewhat threw me off a little bit. I thought that maybe he would have been a bit more cautious or pessimistic about leaving a career. He wasn't though. He was very excited for me. He quit his IRS job many years prior to this conversation. Before he quit his job to start his own private practice doing accounting and taxes, he said that many people were telling him he was crazy to leave a terrific job with the government. He was newly married, had a baby coming, and had a great job with great benefits. Now, decades later, he's very glad he became an entrepreneur and has never looked back. Taxes. The IRS tax code is very complex and arduous for most people to understand. He told me about the tax code and how I could utilize it to benefit me in my business legally. Once I quit my job, I would be a real estate professional, which gave me a lot of new benefits in regards to my taxes. A real estate professional status is based on how many hours you work doing real estate activities. Becoming a qualified real estate professional, as deemed by the IRS, you can take an unlimited amount of real estate loss against your other income, no matter how much money you make. If you're not a real estate professional, you can take a loss of up to $25,000 per year if you make less than $100,000. So it's a much greater advantage to be a real estate professional because you can write off 100% of your real estate losses against your other income. Having many rental properties with mortgages on them would be better than owning them outright for tax purposes. He advised me that having your houses paid off is a great thing, but for tax purposes, a lot of money would be wasted on taxes. This is because I can write off all the mortgage interest that I pay to the bank. An easy way to understand it is that every pig needs a pal. Every pig needs a pal. A PIG is an acronym for Passive Income Generator, and PAL is an acronym for Passive Activity Loss. What it boils down to is the IRS allows you to have deductions on your taxes. As an investor, having a mortgage on a property gives investors the ability to deduct all the interest charged for your mortgage. This is called Qualified Residential Mortgage Interest. This is different than investment interest, which I won't go into, but it's heavily taxed. A qualified residential mortgage interest allows you to write off the interest of your mortgages against your taxes as deductions. This lowers your taxable income, which allows you to pay less in taxes. So for every PIG, passive income generator, or basically a rental property, you need a PAL, passive activity loss, or mortgage interest. Having these combined will help you offset your taxes. If you consider the BRRRR strategy talked about already, the buy, rehab, rent, refinance, repeat strategy, every property you have would have a mortgage on it. There are many benefits of having a mortgage on the property. Number 1, the tenants will be paying all the interest and you get all the tax savings. Number 2, you take all the equity out of the property in the form of a loan and use that money to buy more houses. Number 3, the money taken out of the property is tax-free. Number 4, your business expands quickly because you're using other people's money. And number 5, the tenant is paying off the principal amount of the loan. Financing of more properties. A big concern of mine, and many others, was how I would get mortgages on properties if I didn't have a W-2 from a job that shows stable income. Banks heavily rely on a W-2 from your job to prove your ability to repay back the loan. Obviously, they would be hard-pressed to give you a loan if they think your income may not support the loan you're getting from them. There was a way around it though, and that is with good business income. My accountant went on to tell me that the banks will have to look at cash flow as well as your previous tax returns to show how much money you make. If your taxes reflect enough income to handle the new mortgage you're trying to acquire, lenders are willing to lend you the money for your next investment property. If not, they won't give you the loan because they don't think you can repay it. A great suggestion my accountant had was to stay away from large banks like Chase, Wells Fargo, and Bank of America. These banks are big and don't concern themselves with the little guy. He recommended making relationships with local small banks. Local banks would be more interested in your business than the large banks because large banks are concerned about the big dollar customers, the types of customers who are in the millions of dollars range. A smaller bank would look at smaller profitable businesses like mine more closely. After proving the business model, my historical income and expenses for the business, and my ability to repay the loan, they would most likely be willing to lend me the money. Banks love to give out loans. It's their lifeblood. The banks earn interest from the loans they give to customers. When it's all said and done, though, expect to have a harder time getting financing on your properties. Using cash as collateral. Another great idea was to take $100,000 of my own personal money and allow the bank to hold that as collateral and borrow against it. I can use the same $100,000 in collateral against multiple properties over and over again by putting them into a certificate of deposit at their institution. Every bank is different, so check with your local or preferred bank for their loan programs. This could be a great way to purchase new properties and still have assets in the bank. Imagine being able to buy home after home with the same amount of money over and over again. I'll say that I have not actually done this yet, so I can't really say how this would work in reality. It does seem, though, to be a great thing to look into to build your business. There were many other things that my accountant and I talked about, but these are the key takeaways from the meeting. The information I learned was invaluable. Another great aspect of having a good accountant is that they may have other clients you could network with. They may know of someone in the same business to partner with, or who would provide services that you're looking for. In the end, having a conversation with my accountant gave me more resolve that I was doing the right thing by quitting my job. Depending on your business, it may be good to talk with an accountant to see what you may need to prepare for before you quit. Take action. Number 1. What are your weaknesses that you should have someone else do rather than you spending your time and energy on? Write them down in your journal. Number 2. Who can help you fill in these weak spots? Number 3. Think of the BRRRR strategy I use for my business. What creative ways can you think of that will help you to build your business faster? Write them down in your journal and plan how you will implement these ideas. Chapter 19, Lesson 16, Plan for Future Emergencies. Reid Hoffman once said, "Before dreaming about the future or making plans, you need to articulate what you already have going for you, as entrepreneurs do." The business was doing the opposite of what it was supposed to do. Instead of making me money, the business was costing me money. Month after month, the paycheck I earned from my job was being poured into the business as I was trying to keep it afloat. No matter what I did or how much money I put into the business, it continued to eat up cash. Life is like a dream when a business is making money, but it can be a nightmare when it's not. The day I sold my business, I was relieved. The expenses, time burden, opportunity cost, and the responsibility of employing people were a lot to manage. Add on to that, the business was taking money out of my pocket every month. If I hadn't planned for potential future problems for Downtown Express, I may not have been able to hold on to the business long enough to sell it. Even though I believed my business was going to make me money, I was prepared for it not to. Praise the Lord, we had enough money saved for emergencies such as this. If we didn't have next month's rent, the new buyer may not have followed through with the purchase, or the landlord may not have extended the lease to the new buyer. Many things could have gone wrong if we didn't plan for hard times. Emergencies happen. It's a fact of life. How you prepare for those emergencies will prove how successful you are at being an entrepreneur. Planning for your future income, expenses, and emergencies just might be what saves you from closing down your business in the end. The best time to plan for hard times is when things are going well. It's already too late to plan once things are going bad for you and your business. Learn from my mistakes and plan ahead. If you fail to plan, you plan to fail. Have enough income coming in from your business. In my How to Quit Your Job series of books, I explain that replacing your job income with your business income is the key to quitting your job. We all have expenses, and those expenses need to be paid, whether we like them or not. Without adequate income coming in from your business to pay your bills, you'll become bankrupt and eventually need to get a job again. Now is the time to take a hard look at your income and expenses. If you need to, ask an accountant to help you put together all the information. This will show you if you have enough income coming in from your business to fulfill your obligations and expenses. As an entrepreneur, some months the income will be better than others. Most of the time, your income will fluctuate on a month-to-month basis. You must account for the monthly ups and downs. Here's how you can plan for your future income. Take an average of the most recent 6 to 8 months' income and expenses for your business. Include your personal expenses as well to get an accurate number for your life. Add up all the income for each month. Do the same for your expenses. For a quick example, income from month 1 might be $6,500, month 2 $6,800, month 3 $4,600, month 4 $6,900, month 5 $2,200, and month 6 $4,500, for a total income over the 6 months of $31,500. Now for the expenses, month 1's expense might be $4,000, month 2 $3,800, month 3 $4,500, month 4 $5,300, month 5 $6,200, month 6 $5,500, for a total 6-month expense of $29,300. In this example, the total income exceeds the total expenses by $2,200. This $2,200 is your total profit after 6 months. Looking at this example month by month, you may notice that some months have a profit and some have a loss. In the first 2 months here, profit is $5,500 over the expenses. At first glance, this is great news. Your business is making good money after 2 months. The mistake would be to think that this is extra money that you can spend and not save for the future. Remember my story of how I overspent and under-earned? My rental property business was doing very well, until it didn't. Those 3 months with negative income were drastically detrimental to my overall goal of quitting my job. The money was rolling in, so I didn't prepare for the months with little to no income. My mistake was that I thought I could spend all the excess. I was wrong. You may think to yourself, my business is doing great. These profits should continue, and I deserve to spend that profit. I'm taking my family on a Disney cruise! This type of thinking could be very harmful to your goals. I'm not saying that you shouldn't go on a Disney cruise with your family. I'm also not saying that you shouldn't spend your profits as you see fit. Actually, being successfully unemployed will allow you to do just that. Spend money to do the things you want to do and have the time to do it. But in order to do so, you must plan for the ups and downs of your business income. Now, back to the scenario of the 2 profitable months. Let's say that you decide to take this $5,500 profit and spend it on a cruise for your family. You spend the entire $5,500. Then, on the cruise, you decide to buy your spouse a present for $1,500. After the super fun trip is all over, you have great memories, a present for your spouse, and you're now $1,500 in the negative for your income. Now, look at month 5 with the negative income of $4,000. If we look back at the example, the income from the month was $2,200. The expenses were $6,200. This may have been a very off month, and your business took a big hit. If you plan ahead for these bad months, the good months will help to balance out the loss in profits. If you'd spent that $5,500 on the cruise and the extra $1,500 on the present, you would now be in debt. Looking ahead to the 6-month total income and expenses, instead of being $2,200 positive in cash flow after 6 months, you would now be $4,800 in debt. The point is that being a business owner and entrepreneur, you need to change the way you think about your income. Gone are the days of a steady paycheck just because you gave your employer 40 hours of your life each week. Your income will now fluctuate with your business. Some months will be good and some will be bad. If you plan ahead and build your business well, you'll have enough money to live on and plan for the future. Find the average monthly amount. When planning for the future, it would be best to have an average monthly budget with a fixed amount that you can spend. With that number in mind, you should safely be able to spend this amount each month. With the example above, now take the total income and expenses and divide them by 6 months to get the average each month. The total income of $31,500 divided by 6 months gives you an average monthly income of $5,250. And the total expenses of $29,300, divide that by 6 months, and you get an average monthly expense of $4,883. Now the average profit is the average income minus the average expense. So $5,250 minus $4,883 means you'll have an average profit of $367 per month. Now this is money that you can spend, invest, or save. Instead of spending the $5,500 on the Disney cruise, a good idea may be to start saving the $367 average monthly profit to pay for that Disney cruise at a future date when you have all the money saved for the trip. Create a budget and stick to it. If you don't plan where your money should go each month, you will wonder where it went. Having a budget that charts your income and expenses is a very wise thing to do. It'll help you plan for those ups and downs with your business income. As you are now planning to quit your job, one of the very first things you must do is create a budget. Download the Quick Budget worksheet and fill it out if you haven't already. www.masterpassiveincome.com/quickbudget. It's quick and easy and will allow you to see if your income exceeds your expenses. The goal of a budget is to ensure that your income is greater than your expenses. In the last section, we saw how living on your business income is not like a paycheck. Some months are better than others, and some months are worse than others. Just like how I received a fraction of money from my rental property business, you too could expect $6,000 a month from your business income, but only bring in $17. For me, by having a budget, sticking to it, and by the grace of God, we were able to weather the storm of those hard months, even though it set me back an entire year from my goal. Once you have the Quick Budget worksheet done, you can stop there, or move on to a more sophisticated budgeting software. For those of you who want to read something more robust, the next step for you is to get a budgeting program like ynab.com. This program is terrific and will help you to create an amazing budget that will plan your life without a steady paycheck. Here are the 4 rules you need for your budget. Number 1, give every dollar a job. Number 2, save for a rainy day. Number 3, roll with the punches. And number 4, live on last month's income. With these rules, you'll learn to live on a budget to keep your expenses in check. Also, learn from my mistake and don't fall into the trap of thinking the good days will always keep coming. There will be times where your income doesn't come in like you thought. Be prepared with a budget that will help you weather those storms. Emergency fund. As explained before, because your one income doesn't depend on the hours you work, your income will vary from month to month. Some months may be so rough that you will need extra money to pay your bills. This is where an emergency fund comes into place. An emergency fund is an account with designated money set aside for emergencies. It can be cash under your mattress or a separate bank account. Either way, having money set aside for a rainy day will help you get past the hard times. Without an emergency fund, I would not have had enough money to hold on to my business, Downtown Express, long enough to sell it. This emergency fund should only be used in case of an emergency. Think of it as an emergency parachute. It's better to have one and not need it than need it and not have one. So, how do you set up an emergency fund? There are many different thoughts about how to plan for an emergency fund. You can go by your expenses, your income, your future purchases, etc. The best way I have seen to plan for an emergency is to have 3 to 6 months of expenses saved. This would be any and all expenses you and your business will have during an average month. If you went through your income and expenses when you created a budget, you're almost done with this part. If your total expenses for you and your business is $4,500 a month, you will use that amount and multiply it by how many months you think you may be without income if there is an emergency. If you want to be on the safe side, I recommend having 6 months saved. You could have less, but you're probably not as prepared as you should be. For the $4,500 per month example, a 6-month emergency fund should have $27,000. I know. You may say to me, $27,000 is a lot of money to save up. How will I ever get that much? Honestly, if you're asking that question, I suggest you put more effort into building your business to make more money. When you make more money, you tackle 2 potential problems. Number 1, you're able to save more money faster to fund your emergency account. And number 2, you now have a stronger business, which leads to increased income. A quick suggestion on where you should hold your emergency fund for good interest and still have access to it. I suggest keeping your money where I personally keep my money, Capital One 360. They give generous interest rates for checking and savings. Currently, they give 0.1% for a money market account each month. Visit my affiliate link at www.masterpassiveincome.com/capitallink. With the example of $27,000 saved in an emergency fund, you will probably earn about $10 a month in interest. It's not all that much, but it's $10 more than you had last month. A normal savings account at Chase, B of A, or Wells Fargo, it would take you an entire year to earn $10 in interest. By having an emergency fund and a budget, you will plan well for future problems that may occur. Take action. Number 1, take an average of 6 to 8 months of your previous income to find your monthly average income. Number 2, take an average of 6 to 8 months of your previous expenses to find your average monthly expenses. Number 3, find out how much you should save in the bank as an emergency fund. The minimum advised emergency fund is 3 times your monthly expenses. The maximum advised is 6 months times your monthly expenses. Make a commitment to yourself to save up 3 to 6 months of your expenses in an interest-bearing bank account at Capital One as an emergency fund. Chapter 20. Finish Successfully. An unknown author once said, "Every accomplishment starts with a decision to try." As I've already said, you're worth much more than any job can pay you. Now it's up to you to prove it. Not to me, but to yourself. I already know that you're more valuable than your job because I proved it to myself. Just 3 months after I quit my job, I made 3 times as much money from my business than I ever did from my job. And this is just the start. If I did that in just 3 months, imagine how much money I'll be making in 3 years. This is your future as an entrepreneur. As you plan and build your businesses to be successful, you'll be able to quit your job and make so much more money than you ever could working for someone else. It's my hope that you now have a new understanding of the possibility that you too can quit your job. If you haven't already started your business, it's up to you to find, develop, build, and grow your business big enough to replace the income from your job. No matter what business you choose, you're now an entrepreneur in the making. If you already have a business, think like an entrepreneur and solve the problems that are standing in the way of quitting your job. Now that you've finished these 16 lessons, it's time for you to apply them to your business and life. If you're going to successfully quit your job, you need to put these plans into practice and actively work for your success. The application of these lessons will take time, but it will be all worth it in the end. Focus on being intentional in implementing them into your business. The only thing left for you now is to get to work and plan how you can be successfully unemployed. Entrepreneurs dream about quitting their job. Entrepreneurs actually do it. Make the commitment to yourself today that you will quit your job and let nothing hinder you from living the life of your dreams. Don't forget your free bonus. Just to say thank you for buying this book, I'd like to give you 2 bonuses absolutely free. The first is the bonus 17th lesson, Managing Your Business Finances. The second is the Successfully Unemployed workbook. Download your free bonuses by visiting www.masterpassiveincome.com/SU bonus. We've reached the end of the audiobook. Successfully Unemployed, the 16 real-life lessons you must learn before you quit your job and live the life of your dreams, was written by Dustin Heiner. It was read and produced by Sky Matsuhashi. Please help spread the word about this book by leaving a review at www.masterpassiveincome.com/SU review.